let's look at a real estate sector ETF with really good yield. First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So premium yield, 2.8% from the 52-week low, and it's one of the furthest away here from the highs. So there's been a really big pullback now in the real estate sector. And as you might suspect, it could create some very interesting opportunities. So as you can see here, this is the long-term picture for the ETF. It's been through a lot, and you can see that there's bull markets and bear markets easily. They just come and go. As such, the idea that there could be another bull is intriguing, especially now because, as I will draw in for you, very interesting pattern indeed, and this is what we call a double bottom. Very interesting pattern, especially given that if you look here and here, okay, this didn't, of course, become a successful double bottom. But if you look here and zoom in at the wick, you see that there were bulls who were sort of double bottoming it. If you want to see a more successful double bottom, this here it's not a spectacular one, but it's a double bottom nonetheless. So basically, this ETF has a history of successful double bottoms. Also back here, this bottom and this one, you can see the wick here. So interesting from a bullish perspective. Okay, so let's go to the dailies. In this case, there is some bottoming behavior, but it's still rather early. On the topic of double bull bottoms, we do have a tiny double bottom here, like here and here. Very small, but nested double bottoms. If you look at these other indicators, RSI, PPO really low. On the weeklies, on the dailies, we are still relatively suppressed. What is a bit of an issue is that you don't have like a pickup in accumulation yet, but we still are relatively like early. But looking at the wicks here, there is some sign that there are buyers here, but it's obviously very early. But I think that all things considered, I would definitively write double bottom here. This is a really nice one. I think I will give the bulls an 8. Okay, but this is a contingent 8. This is an 8 given the current picture in the chart. Obviously, if we were to lose this double bottom, then we don't have a double bottom anymore, and then it just disappears. The technical 8, that is. Next, we look at the seasonality. To the left here, the chart over the last 5 years in green, 7 years in blue, and 10 years in red. We do see that this is supposed to be a seasonally strong period into 8th of June, which is bullish for us. Looking at the table view, June, going back to 2014 even, it's a pretty good month. It's one of the best months. Looking here at the sum, it's pretty decent. July, a bit hit and miss. It's been more bullish than bearish. So June and July are bullish. But looking at the chart view here to the left, it is clear that there's some volatility within the month. But all things considered, in terms of the seasonality here, I think I will give it... what will I give it? Maybe I give it a 5. Let's compare the high yield ETF with the global real estate investment trust ETF. So let's go to performance year to date. Global real estate is definitively outperforming the high yield. But from a more contrarian perspective, it could mean that high yield is now more fairly priced than global retail. So the PE here is 48. This is a different type of real estate, though, versus the global REITs. So that's something to take into account. The yield here, though, is really good. 9.8% yield versus 2.54. That's a massive difference. Holdings. You do get some indication about the real estate we are talking about here. Medical real estate, industrial properties, green realty, maybe it's some kind of carbon-ish real estate, who knows? Net lease, yeah. So here you can see also the market cap breakdown. So all things considered here, so the PE wasn't really that good, but then again, this is a completely different type of real estate as well. The yield, though, is also, this is really good yield, so I do think I will give the bulls a 3 on this one. It's pretty good. Here we are comparing the premium yield equity REIT ETF with the S&P 500. Long term, 73% positive correlation, 91% with the global REIT ETF, then 90% with IIR, which is the US real estate ETF. If we go here to the dailies, then we see minus 25% with S&P 500, 56% with REIT, then 73% with IIR. So what happens with the IIR is going to have the biggest effect on premium real estate ETF. Okay. So this one is also showing some kind of bottoming behavior. Pretty interesting pattern at the moment, but not as clean as what we saw with KBWY. Looking at dailies, some kind of double bottom-ish behavior here with this and this. That's interesting. It sort of corroborates what we saw on the other one. Seasonality also here strong into 8th of June. Table view for June and especially July. July is really bullish though. Given the strong correlation, it means that both June and July now could be really good months for real estate, which obviously would be bullish. Okay. Okay, so here we are comparing them against each other. Some kind of bottoming behavior here as well, but not clean. However, we've never seen KBWI underperform IIR to this extent, which is bullish from a more like contrarian perspective. Okay, looking at the dailies. Here again, if you subscribe to the buy low, sell high thesis, then this could be rather interesting. Let's look at the seasonality for these two. So June, as you can see, and that is the month right ahead of us, it is the number one month where KBWI outperforms IIR, so that's bullish. So I will give the bulls a 6 on this one, that is pretty interesting. So double bottom is the entry signal, stop loss, 5.5 in favor of the bulls. So as long as this double bottom holds, I think there's really good reason to be bullish here on the premium yield REIT ETF. So we do have time left. Let's go to Boost over here and have a bit of a look at some of these securities for which there are leveraged ETFs, which makes them very tradable. So I actually put on a trade on Friday. I went bearish on Apple, so I'm now short Apple. It's fully possible, of course, that we will get a full-blown breakout. I am prepared for that. I do have a stop in place. But I do think that given the market cap of Apple and also the context, like it's fully possible for it to break out, but I think that the chances are somewhat reduced. Yeah, because for a huge monster like Apple, they need very good news to have to justify like a massive increase in the market cap. So the chart is pretty high. RSI is elevated but not extreme. The same with the PPO. Daily is also elevated but not actually extreme yet. So one of the big announcements from Apple will be about VR. There's been so many attempts though at sort of nailing VR, and I really don't think Apple will show anything that is like really interesting for hardcore gamers. But I do think that the real like big bang moment in VR will be something that caters to the hardcore gamer. Of course, you could use VR for other things. It's just that we've seen before that you usually need some very passionate crowd to get that momentum for these novel products that have a lot of like chinks that have to be worked out. And there's been so many attempts now from Meta, you name it, and yeah, it's difficult to pull off. When it comes to here, the seasonality here, this where we are now, the seasonality is a bit decent here to the left. Looking at the table view though, you see that June is a messy month. July is very bullish, but June is one of those could be beneficial for a bearish month. Looking at the valuation of Apple, price to book pretty high, not extreme, but definitively very elevated. Price to sales as well. Previous time we had this price to sale was back here, and that led to a pullback. Price earnings also very high. It's possible to go higher. It's just that the current context is not really that ideal for a full bore like new all-time high breakout. At least when you look at valuations. Looking at the price targets, the analysts, they only see a 3% average upside price target. If we measure a 3% move from Apple, so 3%, it would be here. It would, looking at the wicks here, it wouldn't be like a full breakout. It could be a closing breakout, but sort of like to have like a real breakout, you have to not simply just go above where we have been in the past, but also ideally just push and push higher. So yeah, it's fully possible, of course, for it to have a breakout. I have a stop in place, but I do think this is an interesting short at the moment. Looking at the QQQ, which of course is a big deal for Apple. Apple really affects, of course, the QQQs. Very high here on RSI and the PPO. Looking at the dailies, same message, very elevated. Previous time we had this RSI, we did get the pullback. Looking at the seasonality for the Qs, it actually is a bit weaker than you saw with Apple. June is messy. July, though, is very bullish for the Qs, so that's something to just be aware of. But the context here favors maybe a bit of a pullback for Apple and the Qs. So yeah, we looked at premium yield and also looked at the one case where you can have some leveraged trades. What I use is the Direction ETFs to trade Apple. You can go bullish or bearish, and I currently have the bearish one. Of course, it's also possible to just short a stock or get into the options market with bearish option structures. But yeah, there's many ways to do it. But yeah, all things considered, I do think that for a bullish trade, premium yield REIT ETF looks rather interesting. For a potential bearish trade, I do think that Apple, there's a decent probability that this move isn't the breakout. That maybe it would take a little bit of a break, a little bit of a regrouping. Could also just be a consolidation, but to have the breakout come actually a bit later. So just that out of interest, so Apple usually they have their the big like announcement around June 5th ish. So let's look at some previous Junes then. So here's the 2nd, 3rd, 6th of June. So you see that there seems to be a bit of a, at least for 2022, by the rumor, sell the news. Okay, that was 2022. Let's go to 2021. Go here back to June. Here's me. Here's the 4th of June. Yeah, so in this case, you did have a bit of a nice rally here into June, but the context though was sell-off into that event and then, okay, a rally. But that is a completely different context from what we have now. Let's look at 2020. So in this case, 3rd of June. So you did have a bit of a ramp up into and after the event, but then you did have a bit of a pullback. Let's see here. So this is the event. Here is 2019, but this again, you do have the sell-off though before the event. So the context here, okay, so it's a bit messy. So it wasn't that easy to find like a clean pattern. Obviously, if you do have a bit of a sell-off into a news event and then the news event is better than people expected, obviously that is bullish. In this case, we are close to a new all-time high, and then Apple will have the big announcement. Maybe it could be a sell the news event for the investors, that is. But yeah, this one is a bit messy. But yeah, as long as I have my stop in place, I do feel rather comfortable with the Apple short.